And for more on Sears Canada and Canadian retail, we're joined by our featured guest, Anna Avigdor, Head of Trading at Barometer Capital Management. Anna, always good to be able to speak with you. I feel like it's been a while.
Hi, Catherine. Thanks for having me.
Let's get your take first on Sears, but also retail. I mean, there's so many major shifts going on, and yet sometimes people are really wanting to own these consumer discretionary stocks.
I know, but retail particularly, the e-commerce part of it is a big changer, right? I never understand why companies like Sears and Hudson Bay, when you go inside their stores, even if you're not a money manager, asset manager, analyst, even if it has nothing to do with metrics, it's not that pleasant to shop. You have nobody to talk to. It's not an easy experience. So if, like your previous reporter said, if it's going to be a bricks and mortar company, you really now have to make the experience a pleasant one, or else you can just sit in front of your computer and order the stuff online. Even Triple Z mattresses, Sleep Country, which is who might benefit from what's been going on with Sears. Even they launched an e-commerce segment. And you would never think that you could buy mattresses online.
Right.
So yeah, but all the accessories and all the stuff. So everybody feels the need to have an online exposure or presence. And if you're not going to have it, then your in-store experience should be very good.
If you can have a differentiated retail concept, which means a great retail in-store experience, which means you're a retailer that has a destination value add to it, do you buy those companies as a money manager?
I think that with retail, it's sporadic. It's the haves and have-nots. It always has been, even before this time. It's the fashion trend, or it's a style. It's always been this kind of rotation between what's been in focus for the teens. And I know you covered retail. I covered retail as well. Whatever, Children's Place at some point was the big scream, or American Eagle. Or there's always the ones that are working and the ones that are not because of a fashion issue. And so on top of that, not only do you have that kind of variability in retail, and it's vast variability based on fashion, but now you have experience, great control over margins and costs as a result of the e-commerce side of things, right? So that's just overlaying other data points. One of the great things about retail and consumer discretionary was that we have so many data points that we can trade on, as opposed to some other sectors that you only have quarterly, let's say. But with retail, you have same-store sales every month. You have, the fashion stuff and the consumer data.
So aside from Sleep Country, I mean, what else do you own in this sector?
We don't own anything that would be related to this. One of the things that might benefit from this, of course, is Leon's or Bricks as it relates to furniture, because that was something interesting.
What do you think's going on with Hudson's Bay? We obviously got the results the other day that were really disappointing.
Yeah, and it's not able, even though it might on the margin benefit from this as it relates to gaining a little bit of market share in the segments that Sears was strong in, it's not, stock price is not up. Sleep Country is up, I think 3% when I left the office. Hudson Bay should have monetized their real estate long time ago. And so even though the actual mark-to-market of the real estate for some analysts is higher than the current price, they're not getting the credit for it because it may not actually happen and they may not be able to monetize. What's happening from a retail perspective, I think it's the same thing. I don't know who last walked into Hudson Bay to shop, and when you did, it would be very difficult to find the stuff that you want to find quickly. And, face it, the world today has gotten much faster. We don't have time to sit and browse for hours. You want to go in, you want to find what you like, and you want to move on.
Do you think, though, that that part of what we're seeing with these retailers has more to do with a shift in consumer preference, meaning that you'd much prefer to have an experience than an item? Because when you actually do look at the e-commerce sales, they're not that large of a percentage of the overall spending in consumer discretionary. The number has not changed that much, or as much as you would have thought since 1998.
Really?
Really, and that's why I'm always a bit surprised as to what's really going on with the consumer and their preferences.
I think that's an interesting concept you bring up. I'd have to think about it. For sure, there's definitely something to be said for what you said. Of course, the experience and then the straight consumerism, right? I think that for the e-commerce side, would you agree with me that the growth rate has been much faster as it's been growing?
Yes, yes.
So, and in the investment world, we look at the rate of change.
Right.
And so that features in that much. I mean, we have a population, a demographics that skews towards, excuse me, that skews towards an older population, tends to have a slower take-up of the newer technologies. And so perhaps those individuals or that segment of the population wants that experience.
Shifting their preferences.
And it'll take longer as the new generation comes up in the ranks. They have less money than the older generation,
Right.
so the spending is skewed.
So maybe
I
just
think
wait
that
a-
we look forward
Yeah.
to, I think what Amazon, for example, is pricing in, the PE of Amazon is pricing in a huge growth in the E factor looking forward.
Do you own Amazon?
We do.
Okay. When we take a look at retail, you've got to also take a look at some of the REITs that might have exposure to whether it was the Target locations or Sears locations or even maybe Hudson's Bay locations, the malls that might have those as anchor tenants. What do you think in terms of the impact on Canadian REITs?
We don't have exposure to Canadian REITs, so I haven't looked at their exposures very closely. I did look at all of this today, and I didn't see major concentration to, of course, Sears. CT REIT, Canadian Tire, yes. Granite, yes. Not to Sears, but to a major revenue source. They're pretty diversified in terms of the revenue sources.
Why don't you own any Canadian REITs?
When you have a portfolio, and this is part of portfolio management, you have 40 names. You have to pick your top 40 names. You don't have to be everywhere, and at Barometer, you've spoken to us often, we're fairly tactical. We tend to go to where the money flows and where the relative strength is, and since you have 40 names, your 41st name could be a REIT, but it doesn't make it in. And once we find that which works, we tend to press on the gas, and we're not afraid to overweight. And then through stop losses, we end up rebalancing. If it turns down, sure, we don't catch the top, but we certainly catch the wave.
Okay.
So
we'll take a short break, Diana, and when we come back, we'll get more on where you are finding the opportunities to put more money to work. We'll be right back.